Hello and welcome back to Digital Asset Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. The issue at hand is driving interest in CBDCs, say central bank chiefs. So a group of central banks say the issue at hand is the driving force behind the growing interest in national digital currencies. So a governor of 26 central banks, they met in Russia to discuss the issue at hand and its financial ramifications, according to the news release from the Bank of Russia on Friday. The Central Bank Governors Club, including institutions from the Central Asia, the Black Sea region, and the Balkans, said the issue at hand has brought growth to e-commerce and digital settlement technologies. And as a result, one of the reasons financial regulators are increasingly interested in central bank digital currencies, CBDC. But before launching a CBDC, however, a central bank should assess the impact it would have on monetary policy and financial stability, and after that, develop procedures to avoid and mitigate cyber risk, the group added. The IMF is bridging the digital divide to scale up the issue at hand for recovery. You can see how that's syncing up the central banks with the International Monetary Fund, basically stating the same thing. Digitalization has in the past few years enabled developing countries in particular to leapfrog on financial inclusion. So countries like Kenya, Ghana, Rwanda, and Tanzania have made great advances in connecting their citizens to financial systems by leveraging on mobile phone technology. So digitalization must be driven by the needs of the people and work for them. So as the world has grappled with the issue at hand, with closing of borders, curfews, lockdowns, and other movement restrictions, digitalization has come to the rescue. Online shopping and entertainment, digital financial services, virtual meetings, and events have taken center stage in lives and livelihoods globally. So into a little more into the article, they're asking, how can digitalization help? So we have three recommendations to share. First, placing people at the center of the global financial system. Digitalization must be driven by the needs of the people and work for them. For instance, Kenya introduced in 2017 a mobile-based digital bond dubbed M-Akiba to mobilize micro savings of as little as $30 USD to finance government. Remarkably, 85% of the investors were participating in the government securities market for the first time. Now, second, connecting citizens to mitigate the digital divide. So over 700 million people lack broadband connectivity, while over 1 billion lack formal identification, and countries must invest in digital infrastructure and digital identity so their citizens can access online services. Coupled with that, there has to be investment in numeracy and financial literacy. International cooperation will be needed to support these efforts, but the International Monetary Fund, the IMF, World Bank, and other international organizations are working with the private and public sectors globally to help countries. Now, third, strengthen the governance of global digital financial platforms. The so-called big techs are transforming the delivery of services globally, including the developing countries. So the issue at hand has accelerated this trend as they get more entrenched in everybody's lives. However, developing countries have not been at the table when the governance of these platforms are discussed, and one of the task force key initiatives is the dialogue of global digital finance governance. Now, that seeks to facilitate a balanced and more inclusive dialogue, and particularly involving developing nations on better aligning big tech governance to the Sustainable Development Goals. Now I want to follow up with the ECB, the European Central Bank, discussing a digital euro. The ECB, as guardian of the euro, provides currency in two forms. We issue banknotes and we transfer electronic deposits to banks and other financial institutions. Now, skipping down, why a digital euro is the question. A digital euro would make your daily payments faster, easier, and more secure. It could support the digitalization of the European economy and actively encourage innovation in retail payments. And when I hear retail payments, my mind instantly flashes over to thoughts of the technology of Stellar. So the ECB and the national central banks of the Euro area are exploring the benefits and risks so that money continues to serve Europeans as well. In the next article I'd like to discuss has Samsung now allows you to earn Bitcoin rewards. So South Korean electronics giant has renewed its partnership with cryptocurrency-focused shopping app Loli, which was initially announced back in February of last year, 2019. From now on, Loli can purchase various Samsung products, TV, washers, mobile phones, etc., and earn up to 4.5% back in Bitcoin rewards. The company also added support for technology company Garmin, which is known for its GPS, and cosmetics brand Fenty Beauty last month. So you can see they're all starting to connect. You have the IMF, the central banks. Obviously, ECB is a central bank, but it's specifically brought out to describe in greater details of these central bank digital currencies as we move away from the dirty money, so to speak. Take that as you will. Because of the issue at hand, we're moving into a digital platform, having a digital currency. For a lot of newer people, that seems a bit frightening, and it could be, and like anything else in the world, but really your credit card and your debit card, you're kind of already familiar with the digitalization. The difference would be the settlement, clearance, and transfer, and safety and security of the digital asset, for example, Ripple or Stellar. Not limited to, there are others, but just to make a point without getting too broad. With those, you have the total settlement clearance in about 3 to 5 seconds instead of waiting 3 to 5 days for your money to clear before you can spend it. The next article, Netherlands registers first consumer-facing crypto platform since the AML-D5. So everyday investors in the Netherlands can now invest in crypto, and thanks to the company's new registration. Say hello to me if you are from the Netherlands and you are listening to the video tonight. So crypto exchange Blocks received the go-ahead to operate in the Netherlands, making it the first platform to do so since the country implemented the European Union's fifth AML-D5, the Anti-Money Laundering Directive. So Blocks is the first consumer-focused cryptocurrency company that will be included in the registry of the Dutch Central Bank. The company said in a blog announcement today that the registration is mandatory in the Netherlands for every company that allows its users to buy, sell, trade, and hold cryptocurrencies. And in the next and final article of this video, we have PayPal detailing its digital wallet plans for 2021, including crypto, Honey integration, and more. So PayPal this week laid out its vision for the future of its digital wallet platform and its PayPal and Venmo apps during its third quarter earnings call on Monday. The company said it plans to roll out substantial changes to its mobile apps over the next year to integrate a range of new features, including enhanced direct deposit, check cashing, budgeting tools, bill pay, crypto support, subscription management, buy now, pay later functionality, and all of Honey's shopping tools. Another exciting thing, if you've been paying attention, you're aware, but if you're not, and again, if you are new to the channel, PayPal is also now partnered up with PundyX which is the token NPXS for its ticker symbol, but is partnered up with its crypto-capable retail payments system. I believe it's called the XPOS, but I'm sure someone from Pundy can drop a note in there if I did get it wrong and correct me. So while PayPal had spoken in the past about bringing Honey's capabilities into PayPal, CEO Dan Schulman detailed the integrations PayPal has in store for the deal-finding platform it brought last year for $4 billion USD, as well as a timetable for both this and the other app updates it has in store. The Honey acquisition had brought 17 million active users monthly, that is, to PayPal. So these users turn to Honey's browser extension and mobile app to find the best savings on items they want to buy, track prices, and more. But today, the Honey experience will remain separate from PayPal itself, and that's something the company wants to change next year. So that means the company will be able to track the customer From the initial deal hunting phase, where they're indicating their interest in a certain product, target them with savings and offers, and then guide them through its checkout experience, all in one place. And again, guys, the times are speeding up and it's getting more and more exciting by the minute. So I hope you have your bags packed and ready to rock and roll when the rocket starts its engines. I'm going to leave you with a final thought. We fall, we break, we fail, but then we rise, we heal, we overcome. This is not financial advice. It's entertainment purposes only. Much love. We'll catch you in the next one.